Welcome trading legends. In this post, we'll be trading the Australian dollar to Canadian dollar asset using the signals provided by the Tools Trades website and the IQ options broker. Be sure to stick to the end of the video as I'll be sharing a special promo code with you. Let's cover why I'm trading this particular asset. The start of Friday's session has been good for risk assets, with European stocks and US index futures rising, while in Forex, it has fallen against all major currencies, including against our featured currency. The sentiment has been boosted among other things by ongoing stimulus hopes after Nancy Pelosi said she and Steven Mnuchin are just about there, resolving a key piece of a fiscal package. We have also had some positive earnings from Europe and Daimler and solid Eurozone data. Although virus cases and deaths have, sentiment has remained largely positive towards risk nonetheless. Investors remain hopeful that a potential vaccine will soon be approved, which should help to slow the spread of the virus and thus prevent further growth-chocking restrictions and lockdowns. This is why I think the markets have not panicked as they did in March. Indeed, the US Food and Drug Administration, also known as FDA, has approved Gilead's antiviral therapy, has further raised hopes that we are getting closer to finding cures and treatments for COVID. Thanks to the ongoing risk rally, the USD to CAD continues to print bearish price action. Rates have been trending lower for months, inversely mirroring the rallying equity markets. With energy prices also recovering from their March lows, this has further boosted the appetite for the Canadian dollar. More recently, prices have rallied sharply, something which I had about back in July when prices were showing the first glimpses of recovery. Has also managed to hang around its recent heights and ongoing intervention by the OPEC group. Consequently, investors have warned towards the Canadian dollar, given that energy exports make up a big chunk of the nation's GDP. Thus, in the upcoming next week, don't be surprised if the Bank of Canada turns out to be less dovish than it has been previously. However, hints of further policy loosening may detail the Canadians' rally, at least monetary. But from a purely technical point of view, the United States dollar to Canadian dollar continues to look bearish to me. Notice that some of the recent bullish looking candles have failed to bring out the bulls and cause prices to rise. This is typical for a bearish trend, with price creating lots of false signals and false hopes before dropping to take out the accumulated sell stops from the trading long positions. As things stand, therefore, the path of least resistance is to the downside. However, if rates were to break out of the bearish channel, then that would put the bears in a spot of bother. The sellers will be in real trouble if the price then goes on to make a higher high above 1.32. So 1.32 is the line in the sand for me, bearish below, bullish above. As we can see, the signals from the Tools Trades website have worked, but how much did it make us? Well, it's quite a nice amount that almost doubled our starting bids. Be sure to check out my other videos, and if you like this one, like and subscribe, and may the Forex be with you.